What does generational transfer mean? When Nelson passed, Mary received many death claim checks. Was that generational wealth transfer? No. That was a life insurance beneficiary check. So what does that mean to me? What does that mean to how we've kind of learned and moved through this thing called IBC over the last 20 years that we've been doing this? What I like to call myself is an IBC practitioner, and hopefully your clients are IBC practitioners, because if they're not, then you're wrong, because they're the ones that are going to make it or break it. You know that as well as I do. You've got to empower them, but keep a safety net around them so they don't do something crazy and stupid that's hard to recover from. And I know I've talked to Paul Holsley here about a client who did exactly that because he wasn't properly coached. He didn't understand the precepts of IBC and how that related to policy design, policy management, and humma, okay? And you can get underwater very quickly. If you're not empowering and then coaching and protecting your clients, then I'm gonna tell you right now, you're wrong. The first thing I thought about when I talked about framing the conversation was the conversation that Nelson Nash had with me when he pulled up into the backyard of his house and saw this. That's Nelson Nash's house. He sold it to Kim and I in 2010. And I was a little bit concerned about it because we hated the house. So he bought this house in '63. The first thing he did was start expanding it. He finished out the basement. He finished out the second floor. When Nelson and Mary said, hey, listen, we're getting kind of old. We want to downsize to a kind of a garden home. You and Kim expressed interest in buying the house. You just want to buy the house. And I said, and Kim said, sure, yeah. And I said, okay, Nelson, I want to maintain my relationship with you. So please understand, if we buy the house and we're going to change it, we're going to kind of fix some stuff that we think needs to be fixed. And he said, yeah, do it. Don't worry about it. I didn't get the feeling he knew what I was talking about. And so architect came up with the plans, and we say, Nelson, look at these plans. The dotted lines are the new floor plan, and here's the elevations. It looks different, doesn't it? Oh, yeah, it looks great. Yeah, okay. Time came to start building there. That's what you got. I thought he was going to have a heart attack. He's like, oh, what did you do to my house? Well, that's what we did. So communication, okay? Communication is a lost art, and I think he's hearing me. He thinks he's hearing me, but only way he understood what was going on when we had the visual evidence. How many people have been to a Nelson Nash 10-hour seminar? And so this is the first PowerPoint slide I ever built for him. And he always led off his seminar with this slide. Okay, why? Because it's not about anything but your imagination, your ability to reason, and he goes into the logic and prophecy because he is a strong Christian. Those words were critically important for Nelson to lead off the seminar, but most people didn't listen to him. They were waiting for the numbers. They're waiting for the equipment financing illustrations. So that was critically important. Why did he call this whole thing called the infinite banking concept? He didn't just sit down one day and just say, that's a cool thing, IBC, that's awesome. He was always thinking and thinking and thinking and thinking and thinking. And he chose these words deliberately, and he chose them for a specific reason, and he wanted people to discover on their own what the importance and the relationship of the words were. Infinite, what does that mean? Right out of the dictionary, what does it mean? Well, he chose infinite because it's limitless, okay? There's no limit to how you can use your privatized banking system for your financial needs. I mean, you can have an IBC policy and you can use it to buy mutual funds if you want to. It's a repository for your wealth. IBC policy can use for anything. Plus, if you stop and think about it, it's not infinite, but there's a whole lot of ways you can design these things. There's a spectrum out there all over the place, okay? And you go back to the book, Nelson's got the continuum of life insurance on there. He's got a single premium on one end, he's got term on the other end, he's got a mech line kind of over towards the left side, okay? That's kind of infinite. The conversation with Nelson turned into something like, well, we want to perpetuate this within our family, and so the family can have the wealth transfer from generation to generation infinitely also. So that was my clue. That's when I started thinking about, this does make some sense now finally. We can do that. The word that really gets us in trouble over anything else is banking. Well, the insurance companies do this. They can't stand that word banking. But the way Nelson used it, he didn't say build your bank. He's talking about banking as a modifier, okay? It's an adjective to the word concept, okay? What's the name of the book? Becoming Your Own Banker? Okay, it's human behavior. He wants you and your clients to behave like a banker, not to be a bank. There are two vocations that one should be involved with: your primary occupation and banking, behaving like a banker. And another quote, let me be abundantly clear, I'm not talking about a bank in the conventional sense of the word. He wants you to focus on your behavior, concept. He's always about rethink your thinking, ruminate on what you're doing. He did a series of articles, rumination, about thinking and chewing on things and whatnot. Nelson thought the concept, which is an understanding retained in the mind from experience, reasoning, and imagination, was really the emphasis of this whole thing. That's where I go for my guidance, especially now that Nelson is gone. Really, the intent of my presentation is to show you my family's strategy for implementing IBC. We didn't start it because we're talking about generational wealth transfer. It was started by Nelson. He did it. He started it. He empowered us to pick up his legacy, to perpetuate it and keep doing it. And we're trying to do the same thing with our children, for our grandchildren. Okay, our strategy, I didn't have to look far for it. These are right out of the book. I didn't make these up. We're talking about creating your own banking system. We're not talking about buying one policy to live with forever. You start where you can start. You learn, because the next one you get might be something totally different than when you started out with, because it doesn't work for you anymore, because you've forgotten something else, or learned something else. It's just like crazy. If I'm a business guy and I have $1 million I want to get in a policy tomorrow so I can have access to $850,000 for cash flow management, then that's what I'm going to focus on, okay? But I think the vast majority of Americans and Canadians are not in that group, are they? Most of them are blue collar or small business owners or whatever, and I'm a blue collar guy, and I was blue collar in an OD green uniform. My take-home pay was $366 every 2 weeks. How big do you think I started off with? Nelson, as our coach, sat me down, and Kim was involved intimately also, on how to do this. Okay, when we started, it was 1979, and IBC was nowhere on the planet until about 1996, and the book came out in 2000. This is not where we started out. This is where I am now. Okay, so these are the principles out of the book that resonated with me as we work through this thing together. You finance everything you buy, you either pay interest to someone else or you give up interest you have earned elsewhere. My equation to that is IBC, we use it to fund our lifestyle. Transfer that interest debt into an asset that I own. I'm not eliminating debt. I'm not eliminating interest payments. I'm transferring debt and I'm transferring interest payments to an entity that I own, called a permanent whole life insurance policies. So our financing is set up so we fund everything we have a need for. We have not gone to a bank since probably 2004. Another principle, if you know what's really happening, you'll know what to do. Boy, that resonates, man. I mean, you can take that and you can take it as far and as wide as you want to. It can be the big bad world. You can talk about the Federal Reserve. You can talk about the Congressional Budget Office. I mean, if you know what's really happening, then you can know what's going on. Well, let's downscale it to a guy who doesn't have much money, trying to fund his lifestyle with his family. And one thing that I learned early on is you're going to create a generational wealth transfer system. You better know what's going on with these insurance companies about policy limitations on grandchildren. And also children, by the way, but that's a big one, because you can go out there and you can pitch a client all day and all night out of BYOB, grandparents buy policies on your grandchildren, fund them for 22 years, and then turn them over to the parents or the grandchildren. Easy. Until you submit an app and they won't insure them because the parents don't have any insurance. You got to know what's going on so you don't flip over backwards. You are the owner of the contract. Okay, I am the owner of the contract, not the insurance company. This is not a bilateral agreement. We have to agree on everything we're doing. I own the contract. It's mine. The only thing I can't do, I can't change who is the insured individual, right? Can't do that. I can change ownership. I can change beneficiaries. I can even change my funding level, okay, to certain degrees. If I know what's going on, it's really like a unilateral contract, because I have more power than the insurance company does. I have to, unfortunately, hope that their investment portfolio is going to produce dividends. As the owner of the contract, what's key to me for generational wealth transfer is ownership. transfer guidelines. How do I do that? How do I minimize any complications and any kind of monetary issues with that? How do I do that? Okay, you can set it up initially, or you can do it periodically, any way you want to do it. Nelson was not describing one policy, he was describing a system. And unfortunately, the system that we have, we call it our portfolio. We see it as a portfolio, okay, something that we can manipulate and move funds around in whatever and emphasize one over the other when things happen. In our portfolio, funds are a lifestyle. Once a system is established, it can be passed to future generations as long as they are taught how the system works and suppress their baser instincts. What does that mean? All this is for naught if you transfer your wealth to your next generation and they start stealing the peas. This is about human nature. If my kids don't get it, they ain't getting it. If they don't get IBC, they ain't getting no policies. Okay, this is Thanksgiving of 2018. Okay, this is the last Thanksgiving we had in my house with the whole family. He taught us, nurtured us, and helped us pass it on within the context of our financial abilities. Because one thing we did not do, one thing we refused to do, is we refused to borrow money from an insurance policy to start another policy. That was one precept that I personally won't do. Now, some people think that's okay. No harm, no foul. You do what you want to do. If I can't write a check out of my checkbook, then I'm not going to do it. And what you're looking at in that group picture is 26 policies. There's 2 business associate policies that we didn't invite them to Thanksgiving that year, so they're not there. But so 24 of those 26 policies are pictured right here. And our policies are administered by 3 mutual insurance companies and 1 stock company. So he helped us get started in this whole journey by seeding us with some of those policies that I don't think we ever used any of them because they weren't big enough, but they were available for us. Okay, I said before that my take-home pay was pretty meager, so we couldn't afford much. I bought that first policy. When he flew back to Birmingham after leaving Hawaii, this thing was submitted and it was enforced, and I had it for many years. This is one of them that I 1035 later on, so this doesn't exist anymore. Our strategy initially on was to suffer through buying policies when we had children. And I'm saying suffer because it's like, oh no, we got another baby coming. Oh no, here comes Nelson with the application. I'm not kidding. It was painful. We didn't have any money. When I get promoted or got a raise, then we try to buy another one also, so we could kind of keep this thing perpetuated. I don't think it was Kim and I that were wanting to buy this stuff. It was Nelson wanted selling it to us. Here, sign here. Here, sign here. Here, sign here. It's like, oh, man. But I told you, we started getting the lights started coming on around 2000. That's when I moved to Birmingham. I was still in the Army. We see Nelson all the time, Nelson and Mary, and I was watching him write the book. And he's doing seminars here in Birmingham locally, and we started thinking about it and whatever. And so we finally started to figure it out. It started to finally make sense to me personally. I was going to retire in 2001, but we had 9/11, and so I got stuck in the Army for 3 or 4 more years. Nelson said, "You need to get out. You need to help me. I need help. I need help. I need help." Finally, in 2004, I got out. And the Army, all the military in the United States, have a thing called the Survivor Benefit Program. And the Army wants you to sign up for the Survivor Benefit Program. So if you pass, your spouse, your surviving spouse, will have income until she's like 80 years old. And it sounds, well, it's really nice of the military to take care of your spouse like that. It's awesome. But you start peeling back the onion to try to figure out what's really going on. And all they're selling you is a term policies. All they're selling you, and all they're doing is they're deducting your retirement pay to pay a term policy that might be paid off if the military member dies prior to his spouse deceasing. Oh, by the way, when she's 80, it stops. If she gets remarried, it stops. So it's a lose-lose situation. So finally the light came on. IBC started making sense to me. So I said, okay, I'm going to figure out what that premium is for that policy. And it ended up being like $3,600 a year. And so I went to Nelson and said, what can you do for $3,600 a year for a whole life policy? So he did it, boom, got it. So now I got it. And guess what? It's still growing. I still have it. Hey, if I die, she'll get a lot more than what she would have before when you take 55% of base pay projected out for 20 years. The Survivor Benefit Program is something that I figured out was a better deal for me if I create my own program through IBC. Everything we're focusing on now, Kim and I, is on the grandchildren. Everything we're buying is going to be on the grandkids. If I have to increase the death benefit on their parents in order to create more room, we'll do that also. This is a chapter out of the book, Becoming Your Own Banker, an even distribution of age classes. I just call it generational wealth transfer is what I call it. I took the little illustration out of the book and I created my own cool illustration. And what it simply says is, grandparents, you probably have more disposable income than your children do. So when you have a grandchild, buy insurance on the grandchild, fund it for 20 years plus, and then either give it to the children or the grandchild. And now he's got like a college funding plan already established. And the parents, as they're struggling like we were struggling, aren't burdened with additional premium payments. And just don't do it just one time. When those children become grandparents, teach them to do it again. When your grandchildren become grandparents, teach them to do it again. Perpetuate the strategy infinitely. That is the strategy. It's right out of Becoming Your Own Banker. And there's the illustration out of the book. Okay, so what does it look like? Okay, there's Nelson Nash. He was a parent. He had a wife who's married. Number 6 is the number 6 policy that Kim owns. He bought one on Kim, a State Farm policy when she was born. He bought an Equitable one on her when she was a little kid. Then he bought another one on her when she was a little bit older. He owed like 48 policies. Then I got married and I had a kid, but she was not the first kid. I got married, had a kid. And Nelson bought a policy on her, and I bought a policy on her. Then I had twins. Nelson bought a policy on the twins, and then I bought a policy on the twins. And then our oldest daughter, we finally bought a policy on her. She was born in 1981. We could finally insure her in 1991. Okay, there he is. He's buying policies on his grandchildren. And what's he going to do with them? He's going to give them to Kim. And then I got married to my lovely wife, and that's the first one Nelson got on me. And then I got another one, and that one is my survivor benefit plan there. And then we bought another one on Kim, and then the ones that I bought on my children there. So each child's got 2 policies. Nelson owns one line, and Kim and I own the other line. Okay, so we're getting this thing going now. We're finally getting some growth. And then we bought another one on her because for some stupid reason, this policy is paid up at 10, an L10. I said, Nelson, why'd you buy that? He goes, I don't remember. That's an L10, so we had to buy another one on her. The first grandchild, Jack, number 19. The second grandchild, his sister, Lee's son, Nash, other son, Jeb, who's going to be a movie star, and then little Landis, who's my other son's first child. And then the last one is Bennett, who's my other son's first child. So he belongs to him, and he belongs to him. We bought all these policies sequentially on our children, so we're perpetuating the system too. It's starting to go now. It's starting to move, starting to get some momentum. Now I'm starting to have some more cash flow. I'm not worried about premium checks anymore. Okay, so this is what it looks like. What I'm showing you here is, where do these policies come from? Well, I didn't tell you that Nelson also bought one on Jack, Nash, Bennett, and Landis when we did. So he kind of took it one step further because why? He understood this stuff. He got it. And the other ones were bought by their parents. Okay, so that's the system right there. This is right out of Becoming Your Own Banker, Unlock the Infinite Banking Concept, page 73, Whole Life 100. There's the total premium. This is an illustration. This isn't a real contract. Okay, it's a Guardian life insurance policy, $600 for the base premium and $1,400 for the paid-up insurance rider. Total premium is $2,000. It was a newborn. And this is $2,000. Let me show you what I got on Jack. I'm picking my oldest grandson. It's me and my wife right there. And then we bought one on Jack, number 21. Okay, this is the one in the book, Guardian. This is the actual history on one on Jack. We bought it in 2007 when he was born. He was born in London, England, so he didn't get this thing for about 4 months because we waited till he came back to the States for a visit. Okay, I love L121s. Does anybody know why? Infinite. And I'm not going to pay the premium for 121 years. His father better pay it after I go bye-bye, and then he'll pick it up and take it himself. And what's that death benefit going to be like after 121 years? This policy projected a $1,265 dividend in year 12. Okay, that's pretty good. And if you look at the year 6, cumulative net outlay, $14,000, cash value of all additions projected to be $15,000. They've recovered everything in the policy, right? This is actual policy. I couldn't get $600 base, $1,400 PUA in this policy. All I could do was a 12.8. That's not even a 50-50 on a newborn child. Nelson and I wanted to replicate the book as much as we could as a teaching point. So I paid a $2,000 premium. That's what it looks like. In year 12, a lousy $300 dividend. And this is Guardian, one of the biggest mutual companies in the United States of America. Why? But look at my death benefit. Why? Because that equals death benefit. That's what's compounding year after year after year. That builds much faster than that does. Okay, I'm not an insurance agent. I don't have access to proprietary software. All I do is scratch my head and try to figure out best way to pass my wealth to my children and grandchildren. Okay, I don't break even until year 9, 3 years after that. Every policy we bought on our grandchildren, every one of them is an L121. I have the policy up here. I have all the annual statements with all the numbers. Here's the 26 policy portfolio. These numbers correspond to the numbers I showed you on my family diagram. So I talked about lifestyle, life experiences based on how much money we had access to. I gifted all the ones that Nelson had given me or Kim. Gift, promotion, lifestyle, retirement, okay, marriage promotion, State Farm, that's the one that Kim got when she was first born, Equitable. All the ones that came from Nelson were Equitable policies up here in the early years. This is the one I bought when I married Kim right here in 8/29/1979. I 1035 that to a Guardian policy. Here's 2 more I 1035 that were issued in 81 and 84 to policies. The last 2 I bought, this is my little bait there. They're Emeritus policies. I buy them here in Birmingham. The last 6 we've bought are on grandchildren. And you see they're all $2,000 right out of the book, okay? The ones that we bought on our children were before the book was published, and so they're different numbers, like 1250, kind of that range there. And so you can see the face amounts are pretty small. $54,000 annual premium, that's it. And it would have been a lot more if I didn't 1035 some of those, I think. And Kim was paying premiums on 2 policies she had owned on Nelson, which are pretty substantial, and all that's going away, obviously. But that's all we're doing. And what's our face amount for all these little peeny little policies? $4.2 million. That's not that much money. I mean, that's hardly anything in today's world, is it? The total death benefit versus face amount is $8 million. Okay, why is it $8 million instead of $4.2 million? They paid up additional insurance with dividend additions, okay, and also the PUAs. Okay, but our total cash value, because we use these policies over and over and over again, and sometimes we weren't very good stewards in paying the loans back, and so we'd roll over interest from year to year. Some didn't have that much money, so we made a lot of mistakes. That in itself is only about a $2 million total cash value as of today. And our dividends are only $33,758. That's it. Of course, you see how puny some of these smaller ones are here, the new ones that we did. But my biggest dividend check is only about $4,000. And what does that do? It's paid up additional insurance. And our current loan portfolio is about $138,000. Okay, I told you Nelson gave Kim 2 policies on him. We picked them up just like my kids are going to pick these up, and we paid premiums on them. And some of them had policy loans on them. When Nelson passed, Kim got a substantial windfall, and we filled up all the holes that we were responsible for. His mantra the last 2 years was windfall, windfall, windfall. Create a hole for a windfall. If you don't, then you're going to steal the peas. You get that $500,000 check, what are you going to do? You're going to buy that BMW. You're going to take a trip to Acapulco, and yeah, you're going to get around to buying some more life insurance, but you're going to blow it. If you have a $500,000 hole, it all goes in that hole, and now it's creating more wealth that you can borrow. We didn't pay the $137,000 back because these are loans that our children are responsible for, and they're my policies or Kim's policies. David owns one on Lee, who's my daughter. She owes me $36,457 on a car. We didn't fill those up. They're responsible for those, okay? They need to learn how to be good stewards of their money. They need to understand how to do this. They need to take responsibility. They need to perpetuate this and teach their children how to do this so they can take it to the next generation. This is right out of the book, okay? And the reason I picked only these is because, yes, I know from experience it covers that. I know, I've seen it, I've used it. I didn't check this one because I haven't done that one yet. Yes, We've done that both positively and negatively. Some of them are learning and some of them are not. Some of them have to be taken back to the book more often than others. Yes, stewardship is critically important. If you follow these, and Nelson added one more, rethink your thinking. This is the last one that he really kind of added and resonated and everything. When he started getting closer to passing and started thinking about the windfalls, he kind of changed his mantra. And the first thing he did, he'd come over to my house and he'd say, how much policy loan debt do you have? And I was embarrassed because it's like, oh, I haven't been servicing my loans. I mean, I don't want to tell you because you'll get mad at me. But that's what I was thinking. I thought he'd get mad at me. And I'd say, about $500,000. And he'd go, oh, good. Why? Because you got to have a place to put a windfall. And I want to make sure you had a hole deep enough.